Hey guys, I wanted to do a part two of The Intelligent Investor. I was setting up a way to do book reviews at the booth, but there was a lot of noise, and then we were trying to organize for our Super Saturday sale. But first, a word from your sponsor. We're doing 30% off rare and collectible books for Small Business Saturday. That's a week from yesterday. Um, Something tells me that there might be some goodies for people who go early. So that's at the Old Wagon Booth 7 exclusively. 30% off used books, collectible books, and rare books at Booth 7 at the Old Wagon Wheel. So, The Intelligent Investor. This is a great book. I'm still reading it, but I do recommend the investment. Again, if you're interested in investing, if you're interested in the life of Warren Buffett, also, because Ben Graham was his mentor, Warren's mentor. Um, so we have. I recommend doing some of the calculations for your small business specifically, or for your side gig. If you have an Uber business, um, you can do some of these calculations to figure out ways to create future value in your business. Um, the Also on page 422, there are four great case studies about businesses that seemed great, but then within a matter of months or years, really one quarter, went belly up. Um, so Ben Graham, the intelligent investor, is always creating this idea of a margin of safety. This is what Ben Graham would talk about, and it creates itself a hedge against risk. Because if you're buying a better company with a higher asset value at good price, and I'm not talking about bullshit goodwill like branding BS. I'm talking about hard assets that create revenue. Intellectual property that creates revenue, not bullshit goodwill. Goodwill with intellectual property is good. So, and then creates a margin of safety. So the case studies create and reinforce the defensive mindset that he is proposing in this book. It's a defensive mindset in investing, to me as a layman, is quite simply eliminating specific risks by looking at the fundamentals in the here and now of the business. That you're investing in a business, you're not speculating in a stock. You're investing in a business, you're not speculating in a stock. So the story about Ling Temco Vote, they were the 14th largest listing on the New York Stock Exchange in 1969. And it was a classic case of the fair-haired boy genius. This guy, Ling Vote. He started this company LTV that basically it was a small company, and they started buying up very large companies and got huge debt. Um, all this all sounds similar to WeWork to me, and I'm going to tell you why the WeWork outcome is better from the perspective of what an intelligent investor is advocating. But there was three things. It was like shuffling different quarters is what LTV did. They would be able to shuffle debt from one quarter to the other. So they showed 2 or 3 great quarters when they went public, but then by the fourth quarter they were damaging. What WeWork is it's a much better outcome because they didn't go to the public markets, and they're with Enron, with LTV, with WeWork, with these companies, there is value on the way up that's created. People have careers for these jobs. Each one of them have unintended helpful benefits. Um, Enron had several. First of all, unlike maybe WeWork, which may not have an underlying business, Enron always, they promoted the energy business, and they inspired places like California to find better long-term solutions for their energy needs after they got built by Enron. Um, Hundreds of thousands of, middle class jobs are created when these are going up. Do you see what I mean by when these are going up? I'm not talking about it being a good investment, that's for sure. But you get to a place where you can lose $100,000, where you can lose $300,000, where you can lose $1 million portfolio. So there is always some value in that. I don't think that companies intend to they want to please all of their stakeholders, employees, customers, and shareholders when they start. Um, but yeah, WeWork is a better outcome. Create new value. It may not create as long a term value as the poor people who just got laid off, the 2,400 people who got laid off this week. Um, what I want to tie this in was the Intelligent Investor. Finally, this is the um, 86 edition. Ben Graham and his editorial team have done a really good job of footnoting um, different cases of the same thing happening and updating the book. The book was written in 1950, but it's been had several editions with newer case studies. But the case studies, especially on page 422, are excellent for you and me, the stock speculator, non-trader who just is interested in the markets. So, thank you for listening to part 2 of the Institutional Investor, a review by Book Driver. Check out our booth in North Glen. Good savings through Small Business Saturday.